Hey, I know what you want. You want cheap stocks, don't you? Well, come on in here because I've got 3 cheap dividend stocks for you. They're under 30 bucks and they pay an over 4% yield. I wasn't supposed to drop my quarter. So without further ado, let's talk some dividends. Hey, and if you want to check out the bridge portfolio you see behind me, head over to dapperdividends.com, click on my portfolio, and there you can check out the bridge portfolio in all of its glory. First up with a 4.30% yield is Unum Group, which is an insurance company, and they have a broad portfolio of financial protection services. They operate through their Unum US, Unum UK, Unum Poland, and Colonial Life businesses, providing disability, life, accident, critical illness, dental, and vision insurance. So while in 2020 they generated over $13 billion of revenue, their cash flow took a bit of a hit. They have a strong operating history and they were able to increase their dividend throughout the Great Recession, and they are currently below a 30% payout ratio. Unum has decreased their shares by 31.54% since 2011 and has increased their free cash flow per share 109% from 2011 until 2019. And when the COVID pandemic hit, the free cash flow per share fell 69% to $2.35. Now, their most recent dividend increase was 5.3%, and the 5-year compound annual growth rate is 8.73%. And Unum Group is down almost 39% the past 5 years, bottoming out in March of 2020. And I think they could be heading back up to that $50 per share area. So I think Unum Group looks really interesting in the insurance space. I'd say give them a look-see. They have been increasing their dividend for 13 years, which includes through the last Great Recession. So they can increase it in times of turmoil, and they have enough free cash flow per share to cover that dividend. I think they're a good business, and under 30 bucks a share, 4.30% current dividend yield, I would give Unum Group a solid look. Number 2, H&R Block, ticker HRB. They're a global consumer tax services provider who's prepared over 21 million U.S. tax returns last year. They have over 10,000 company-owned and franchised locations around the world, and they also provide tax software. H&R Block has a market cap of $4.9 billion, and they generated $3.4 billion in 2021 revenue. And speaking of revenue, the Internal Revenue Service requires that we all file taxes, so while they have competition coming in the form of TurboTax, which we use, that tax code is super complicated, and it's currently at 2,652 pages and well over 1 million words here in the United States. So a lot of people need help with that complexity, and H&R Block is always going to have a solid stream of customers.
Customers, everyone! Customers!
Now, do be aware that when the tough times hit the economy, H&R Block seems to freeze their dividend. That's their tendency, but good news, they at least don't cut it. They'll just keep it frozen where it's at until the turmoil's over, and then they regain raising it. H&R Block, they're currently down almost 4% the past 5 years, going by their 2021 number where they earned $3.04 per share in free cash. The current forward annual dividend of $1.08 is well covered. Shares outstanding have been reduced by 33.86% since 2011, and in 2021 they had a very healthy net profit margin of 17.1%. So 6 years of dividend growth, that low 38.3% payout ratio, and a dividend that hasn't been cut since 1996. I think because the tax system is basically helping to funnel people into the services of H&R Block, I think that they are an attractive company, especially heading into tax season here, to take a look at and get some of that 4% dividend yield, north of 4% dividend yield for yourself. Number 3, ticker EPD, Enterprise Products Partners, has a 7.95% yield. Now, Enterprise Products, they're one of the largest publicly traded partnerships, and they are a North American provider of midstream energy services to producers and consumers of natural gas, gas, crude oil, refined products, and petrochemicals. And some of their services include natural gas gathering, treating, processing, transportation, and storage, and they were founded in 1968.
1968.
So they have about 50,000 miles of pipeline that they own, which is massive. They have storage capacity for about 260 million barrels of crude or natural gas or petrochemicals, which makes them hard to compete with, as we can see that they've increased their cash flow 457% since 2011, when it was negative 33 cents, but they have also increased their shares outstanding 24% in that same time frame. And while revenue has decreased 38% since 2011, their net profit margins, as you see, usually find themselves in the mid to high teens, and Enterprise Partners is down about 14% in the past 5 years. That dividend has been growing for almost 23 years, not a real big 5-year growth rate at only 2.5%, and the payout ratio, because they are an LP, is at 86%. So when you see that LP after the ticker, be aware that they are a limited partnership. Now, they don't pay any income tax because they're passing those through to you, the partner.
Saddle up, partner.
You're the partner in the limited partnership with this business. You're essentially that business owner. So just be aware that you will receive a Schedule K1, and that is something that has to be filed and can be a headache for a few people, but I would suggest clicking the link in the description below for that wonderful Investopedia article, and you can get all caught up on limited partnerships. Little bit of food for thought here on the MLPs. On the limited partnerships, we're keeping them inside of our Roth. That's where we move them to because it's tax advantage. So we're not going to have to deal with that K1. But if our income were to go over $1,000 a year, then whatever's after $1,000, as I understand it, would indeed be taxable. So just something to consider. Same thing with REITs, because REITs are another pass-through entity and you're taxed at your ordinary income rate. Those dividends are not tax advantage. So if you have the option, you might want to consider keeping your REITs and your MLPs as long as the dividend income, the distribution they call it, is under $1,000 a year. So if you're looking for a really high yielder that has a solid dividend track record and is coming up on being a dividend aristocrat, check out Enterprise Partners. Now, in terms of disclaimer, we are not invested in Unum Group, ticker UNM, H&R Block, ticker HRB, or Enterprise Products Partners Limited Partnership, ticker EPD. Did you hear what's going on with PepsiCo and Tesla? Oh my gosh, if you haven't, click the video right here. I'll tell you all about it, and I will see you there.